What's going on, team? It's Caddy with Money Vesting. I hope that you all are having an amazing day. So in this video, we will be looking at American Airlines Group, ticker symbol AAL, and I will give you guys my technical opinion on where do I see those key support and resistance levels and where do I see the pattern going in the near future. We will also talk briefly about some of the fundamentals and financials of the company. How is their cash versus debt situation and what does that look like? And if you guys enjoyed this video, please make sure to drop a like because it really helps out with the channel and recommends this video to other people who might be interested in watching as well. Also subscribe and hit that notification bell so you don't miss out on any future market updates, videos related to these stock breakdowns and technical analysis. So when we talk about American Airlines Group, the first thing that comes to my mind is going to be debt, because the company currently has well over $24 billion in debt after taking on another $5.8 billion of federal aid due to this global pandemic, and they raised another $2 billion to refinance some of that old debt that the company had. Now, the reason why they are taking on so much debt is because of the decrease in travel demand due to the revenues taking a huge hit. That being said, the company has been struggling for a little while. I did a separate analysis and a video on all these different airlines, Southwest, Delta, United, and American, and I concluded that Southwest and Delta are in the best shape to recover from this global pandemic and will most probably see the fastest recovery. Now, when we talk about the American Airlines Group, we also looked into the break-even load factor, or the BLF metric, and that essentially goes over how many people you need in a single plane in order for these companies to break even. And American Airlines has the highest number among the four airlines at over 75%, meaning that they need more than 75 people in a plane with 100 seats in order for them to break even and cover their operating expenses. Now, that obviously does not help in a situation or a market environment where demand for travel has gone to very low points. We also looked at the TSA checkpoints that essentially goes over how many people are traveling on a week-by-week basis, and coming in from last year, that number was hovering between 2 to 2.5 million versus now when we saw a lowest number at 87,000 people, and that has been consistently growing over the weeks to now well over 600,000 people, but that still only represents 25 to 30% of the travel demand. Now, in order for American Airlines to remain solvent, because they have filed for Chapter 11 bankruptcy in the past around 2013 when they merged with US Airways in order to stay afloat and refinance some of their $16 billion debt that the company at the time had, which was going to mature in 2018. So they did merge with US Airways and they did refinance some of that debt, taking on more debt to now well over $24 billion. The cash reserves sit just under $5 billion. That essentially means that the company doesn't have enough money in order to pay off its long-term debt. But looking at it from a technical standpoint, you guys understand that there is a very clear resistance at the $58 to $60 level. That's where the stock has essentially gone rejected multiple times, going back as far as December of 2006 when the stock hit that level and then pulled back close to 95%, all the way down to $1 per share. Then over the course of the next few years, it made its way back to that $58 to $60 level, had a minor pullback in January of 2016, pushed up in February of 2018, essentially hit that level again, and then since then the stock has essentially been declining in value due to the increase in operating expenses and decrease in the operating margin for the company. Now, the company also has negative free cash flows, so it becomes challenging to understand what the fundamental value or the intrinsic value per share is going to look like. But that being said, let's jump into the daily chart and the 4-hour chart to understand where those key support and resistance levels are going to be for this stock. So this pattern kind of looks very similar to my analysis on Boeing when it was making a descending pattern with a horizontal support. So if I were to highlight a support level for American Airlines, this right here at the $9, $10 level is going to be a very clear level of support for American Airlines. And the reason I say that is because this right here has been acting as a really good support. As you guys can see, it's validated multiple times, but it also has been making these lower highs that essentially represents a descending triangle for the stock. And usually when the patterns form a descending triangle, that essentially means that it's obviously not going as high as it did the previous time, so that's definitely a sign of weakness, but its support, it's staying put, right? So it's a horizontal support and the pattern usually does break down of these levels. But in the case of American Airlines, it did the exact opposite. It essentially broke out of that channel and ran up close to about 134%, trading all the way up to $22 per share. So if we look at it more closely now, what the pattern is doing, it's essentially bouncing off of its 200 moving average, which is going to be the blue line, but the support is also going to be a horizontal support. So this previous resistance formed on May 27th at around $12.15-17, that has now started to act as a really good support. And if I were to highlight the lower highs that the company is making, it's going to be somewhere around here. So the earnings are coming up on July 24th as well, and the analyst estimate is going to be a negative $7.32 per share, which is going to be a drop of over 400% from the same quarter last year. As far as the sales number go, they estimate the number anywhere between $1.3 to $1.5 billion, which is going to be a drop of well over 85% from the same quarter last year. I was also reading another article that essentially went over how many people currently are employed at American Airlines that they no longer need for the fall schedule, and that number is well over 20,000 employees that they can't lay off because of the federal aid that they received for well over $5 billion to keep those people on the payroll. So due to the decrease in travel demand that we have seen more lately due to the global pandemic, the fall schedule for American Airlines doesn't look as great as it has been over the last few years, which is why the 20,000 people that are currently employed with American Airlines are no longer needed, but they're still kept on payroll. So that is essentially restricting American Airlines from laying off the 20,000 people that it doesn't need right now. Because after the CARES Act ends at the end of September, things will become really interesting, especially in the airlines industry, to see which companies are able to sustain the pandemic further, and if they are able to keep people on the payroll without laying people off, and if they're able to meet their debt obligations, which in the case of American Airlines is probably, in my opinion, going to be the most challenging part, is how they're going to service their debt. If you think about it from an individual's perspective, if you have credit card debt of, let's say, $5,000 and that credit card debt comes due, you're essentially opening up a new credit card in order to transfer that balance over to buy yourself some time. So when that other credit card balance comes due in a year, 2 years, that's when you're going to maybe refinance that debt into something else. And that's exactly what American Airlines is doing. They're essentially buying time in order to figure their debt situation out. But in my opinion, I don't see American Airlines as a long-term play, especially when they have so much debt with very little cash reserves and free cash flows are negative and they have negative earnings per share coming up. In the earnings report, we will obviously find out how well they performed in the Q2 of 2020. So one of the things that I also want to mention is that American Airline Group's burn rate, the cash burn rate, has actually gone down from April and May when they were burning well over $100 million per day to now just about $35 million per day. So that's definitely a good sign for the company that they are reducing some of their expenses and they're only burning through $35 million per day. So now also looking at the RSI and the MACD, the MACD has peaked out and it's now showing signs of a minor push up, and the RSI sits at just over 42. That essentially means that it's not too overbought, not too oversold. It's pretty much neutral, and that's what we are seeing due to the consolidation that we are witnessing for American Airlines stock. So moving forward, based on this descending pattern and this horizontal support, which is very similar to what we have seen in the past, it's no surprise that the pattern could potentially push up higher to its next resistance at $19 level, which is going to be right around here. And if that happens, that's going to be a run up of close to 45 to 46%. Again, it doesn't have to happen. If the breakout does come out of this channel, that's where I see the pattern going next. But if we do break down of this $12 support, then it's obviously headed to its next support at $9.30, which is also going to be its 52-week low, because that's where essentially the pattern found its support to be more recently during this global pandemic. So I hope you guys enjoyed this video and my quick fundamental and technical breakdown of American Airlines stock. Please make sure to do your own research and your own due diligence when it comes to investing in the stock market. This is not financial or investment advice. This is just my opinion on where I see the pattern for American Airlines going in the near future. From a long-term perspective, this is not a company that I would personally be investing for the long term, only because of the market environment that we're in, and also the fact that American Airlines balance sheet is not as attractive as some of the other ones. I also did a separate video on Southwest and all these different airlines and why I've personally chosen to invest in Southwest Airlines. So I will put a link down in the description below for you guys to watch. As always, happy investing. If you guys enjoyed this video, please make sure to drop a like, subscribe, and hit that notification bell so you don't miss out on any future market updates, videos related to these stock breakdowns and technical analysis. As always, happy investing, and I will see you guys in the next video.